Hello guys, it's Max here from Daily Market Movements, and in front of me we have the Nasdaq 100 futures chart. Now, as you can see in today's trading session, we're trading towards the downside ever so slightly, currently trading at 12,919. On Friday, the last trading session of the week last week, we did see a movement down towards 12,800. A lot of traders started to panic there because, we had that daily close the day before up and above the 50-day EMA up at around 13,050, and then once we had that 250 point pullback, a lot of traders started to panic, thinking that we were going to go and return down towards the monthly swing lows down at roughly 12,500 to 12,250. I had a lot of our clients here at Daily Market Movements and a lot of YouTube viewers send me private messages asking, for my opinion on the markets, and I just told them to be patient. Okay, the Nasdaq 100 is very, very strong. We've just had a 10% correction. Now, it is perfectly normal that bull markets have corrections. Okay, even some of the best stocks pull back, and that's what traders really struggle to understand, especially when they're new to trading. You can have the most bullish company out there, but every now and then these companies do pull back, and it's actually healthy because it then creates value, and then this is value where investors will like to jump in and add, and that will just help build momentum when we return back towards the all-time highs. Now, there's $3 trillion currently sitting on the sidelines, which is very, very, very high indeed, which this is money that investors will be looking out for moments where value is offered, where they can then invest their funds. And I'm not talking just about the retail traders here. I'm talking about the hedge funds. I'm talking about the banks. There is almost a record amount of money sitting on the sidelines. Sure, there's not 5 trillion like there was back in March, but 3 trillion is still an extortionate amount of money. Nasdaq 100, though, from a technical perspective, we're just trading up and around that 50-day EMA. We did actually go and touch it when we were briefly trading positive just prior to when the markets opened. What we really need here from a technical perspective is that daily close again above the 13,000 level. In fact, I would kind of like to get a close up between 13,100 and 13,200. Once we get that daily close roughly around this area here, that's when a lot more buyers will feel more comfortable stepping into this market and buying back up towards the all-time highs. I think first of all we will go in stages. So once we get a daily close above 13,100, we'll then go to 13,300, which is the swing highs here. Then we'll go to that 13,600 area, due to the fact it has offered some noise when we were trading in the past, back mid-January, going in towards the month of February, and then eventually, of course, we will go and target that 13,900 area. You see a lot of investors right now, a lot of news channels and a lot of news outlets saying, tech at the moment, high multiple tech is just not good, and I completely understand why. With the yield rates rising, it makes the future projection cash flows for these big tech companies a lower value, and that's why we've seen a massive sell-off here in the big tech names, the likes of Apple, the likes of CrowdStrike, which have ridiculous valuations. You had Apple, which was valued at over $2 trillion, but one thing will not change, and that is that as human beings, we have become more digital in pretty much everything we do, whether it's from a work principle, education, even just socializing. This past year has forced us to buy the latest iPhones. It's forced us to become more digital in the way that we work, to use the likes of Zoom, to use, online bank transfers, in pretty much every single sector, we have become more digital. So, yes, once the economy reopens, are we going to see an economic boom in travel? Of course we are. But at the same time, we're going to be taking our phones. Everyone's going to be Snapchatting or uploading pictures to Instagram. They're going to be likely paying with their Visa or MasterCards through their Apple Wallet. Yes, people will be traveling. Yes, people will be going to restaurants more than ever. But at the same time, they will be becoming more digital in everything they do. So don't think for one moment that these tech stocks are done with, because they're not. In fact, they're just getting started. A great example is Apple. In 2025, they're wanting to go into the electric car market. You have the likes of Amazon, which is wanting to go into space. That's why we saw Jeff Bezos, step down as a CEO, because he wants to, take Amazon into a different industry to compete with the likes of Elon Musk. So I'm extremely bullish here for the Nasdaq 100, and in fact in years to come I think that we will look at this 13,000 price area and think, oh, I wish I bought down here. So I'm incredibly bullish here. Us and the Signal team have made a a ridiculous amount of money over the past year or two in the Nasdaq 100, when we've seen a huge rally all the way down from that 7,000 area. Especially the past year, we have made a ridiculous amount of money over the past 12 months, when we did have that massive sell-off last month. And this is kind of the same situation that I think we find ourselves trading in right now. I do anticipate a bounce from this, from these levels, and it will only be a matter of time now until we're trading up at 14,000. So I'm a buyer of a Nasdaq 100. I have zero interest in selling. US indices are a product. They were built to go up, and that's what they've been doing for the past couple of decades. So no interest in selling. And in fact, I'm incredibly excited for the future here for the Nasdaq 100, as I see plenty of fantastic money-making opportunities on the horizon.